I'm Anna Gayton, Fordham University student, and you're watching Taking Stock.
Here we are in size to
2 minutes to go here into the closing bell on this Cinco de Mayo edition of Taking Stock. The incredible team from Constellation Brands set to do the honors. They will also join us here in just a little bit. But let's kick things off for a fresh round of all-time highs with the Einstein of Wall Street, Peter Tuchman. All-time highs for the small caps, for the NASDAQ, for the S&P. What is going on?
You know what, we talked yesterday that we're wondering what was the directionality yesterday, and it was basically just a lack of anything bad or good that the market had to put its teeth into. Today, there was once again a lack of negative news was a good enough reason for them to buy the market. So as you said, record highs across the board, a lot of enthusiasm in the market, a good breadth across many different indices, and you know, it's enthusiasm that's warranted, I think, for a lot of ways. We have not had a number of days now with anything really negative that's weighing over us. That dark cloud of the conflict in the Middle East is no longer as in our headline. It's not the breaking news. Oil, we've been disengaged that. You know, was the market trading up and down with oil yesterday? Probably. Today it's just about runways clear. We call this a melt up. Fresh May money also coming into the market. And that's important to know.
So out of all these sectors in the S&P 500, what does it tell you? There's only one down. Look at this breadth, this rotation. It's not just tech doing the heavy lifting.
When that happens, that's a good thing.
That's a good thing, right? A little bit of rotation.
Giddy up.
The great Peter Tuchman, my man. We'll talk to you soon. The Einstein of Wall Street. Fresh all-time highs for the S&P 500, for the small caps, for the tech-heavy NASDAQ as well. Constellation Brands. Time now to do the belt. All-time highs for Cinco de Mayo, because why not? Your final tail of the tape. On this May 5th, the S&P 500 in positive territory, in record-setting territory at that. We'll finish up 0.8%. The Dow 30 up 0.7. The New York Stock Exchange Composite Index up in positive territory, 0.5%. And the small caps at an all-time high, up 1.7%. On this trading Tuesday. Out of the Dow, Cisco, Caterpillar, and Apple. Those are your strongest performing names in the Dow 30. Downward pressure, however, on names like UNH, Amex, as well as NVIDIA. Disney also down ahead of their quarterly results tomorrow morning. West Texas and Brent, both in retreat. Yields in retreat, volatility in retreat. All the things you want to see be red are actually kind of red for the tape. And let's talk much more about today's tape with Ted Thatcher, president at Bright Lake Wealth Management. Come on in this way, my man. We'll take you here. Thanks for being here.
Of course.
And thank you for bringing the all-time highs more broadly as you look up. What do you track across the markets, and what do you make of the resiliency that we have for another round of highs?
It really is a special Cinco de Mayo here at JD. I mean, we're seeing absolute green across the board. The S&P closing at all-time highs. Wall Street has absolutely demanded ROI, has demanded revenue out of the 600, what has become $750 billion of CapEx spend the mega caps have put into play, and we're seeing it today, a glimpse into that ROI, into that revenue come to fruition.
Markets are at all-time highs. What is the message, however, you think that Main Street is getting right now? And it's an important distinction that the stock market is not the economy, and sometimes they tell two very different stories, Ted.
It's really true. If we ask ourselves, hey, you know, how's the economy doing? We have to make this distinction. Are we talking about the financial economy here on Wall Street, or are we talking about Main Street and the real economy? The truth is, the real economy is a little bit under pressure here. I mean, Wall Street may have entirely moved on from the war in Iran. Oil prices are at over 100 now for over 2 months. The average consumer doesn't have the luxury of looking beyond that. We are going to see that inflation bubble have to move through the economy, obviously putting pressure on costs. We saw PCE come in last week at plus 3.5% year over year.
I want to get your take on the hyperscaler AI spending, because largely what is fueling the current spate and success of corporate earnings season is confidence in the hyperscaler spending. You say there's a bit of a new twist, however, in the general narrative of market concentration. What do you think we should be paying a bit more attention to here, Ted?
Yeah, So in 2025, there was this real clear narrative that there was so much concentration in the Mag 7 companies, really pulling the markets up, driving returns. We're seeing that again now, but with a little bit of a tweak, a little bit of a nuance. It's really the bottlenecks in the AI economy that, again, $750 billion of capex is going. We can just follow the money. It's putting demand pressure. And so absolutely, we're seeing that, especially on the memory side. We saw Micron have huge, we have returns, and then AMD comes out today. I'm expecting a beat there as well.
Yeah, we got AMD coming up here in just a short time. What's your current thinking on monetary policy? Obviously, Jerome Powell out, at least as a chairman. He's not totally vacating the Fed, I should say. Kevin Warsh coming in. Your expectations for rate cuts between now and the end of 2026?
The base case at this point, if we look at the statistics and odds, is that we actually won't see a rate cut until December of 2027. At least that's what the odds are currently telling us. That said, there is going to be a change of the guard here. Kevin Warsh has started to put out a little bit of a different narrative. He's saying, hey, AI may be deflationary. We may be able to lower interest rates, sooner than expected. My only concern there, though, is, of course, if you start that type of, rate decrease cycle too early while consumers are having to work through this, energy cost bubble working through the economy, that we could be put sort of between a rock and a hard place.
Before I let you go, and I got about a minute or so left,
Yep.
You like a lot of these big tech names. I know you like Oracle, but how about some of these Mag 7 names? Microsoft, Alphabet, Meta, Amazon. We've heard from earnings results from a lot of those names. Do you like where they are right now?
Yeah, I really do love, especially where Amazon is at right now. I remember we were talking back when they closed their last earnings report. They were getting absolutely beaten up because of all the extra capex. Look at where they are today. They're leading the pack with Google in terms of the Mag 7 performers, coming out of this quarter with a whole lot of great headlines. Andy Jassy letting us know, hey, if just our chip business could be worth $50 billion. And we saw a ton of headlines yesterday about, the logistics empire that they have continued to build, and that is to say nothing of the robotics side.
Yeah, of course, Amazon was the big Mag 7 laggard last calendar year so far. Bit of a different narrative that has emerged here. Ted Thatcher, president at Bright Lake Wealth Management. Thanks for being here to kick off the show. It's nice to see you.
Great to see you, JD.
All right, Dino, grab your mic. Jeff, you and I are going to head this way. We'll bring in the latest analyst calls on the day that moved today's tape. We'll start with Goldman Sachs reiterating Apple as a buy, but saying that App Store revenue could be, in their words, an overhang on the stock despite improving growth in China. Shares of Apple up about 4%. On here. What's up, guys? How we doing? Next up, B of A upgrading Ulta Beauty to a buy from neutral with expectations of consistent sales growth. Shares of Ulta down in negative territory, about 12% year to date. And finally, B of A downgrading Lowe's from a buy rating down to a neutral rating, but says right now the risk reward is actually in balance. Lowe's up on the day, but still down about 6% year to date. We'll take a look at one notable, and how could we not, here in celebration of Cinco de Mayo, one of our favorites. This is Constellation Brands, up more than a full percent on the day. This includes household names like Corona and Modelo, the best performing beer and beverage stock so far here in 2026. Shares up about 9% on the year, even outpacing the broader S&P 500, though it is currently trading down towards the low end of its 3-month range. The average one-year price target on STZ sits at about $177 a share. That's upside potential of another 18%. All of this week here on the show, we will be bringing you, full coverage of Consensus 2026 from Miami. Earlier today, FinTech TV's very own Remy Blair caught up with CEO Cody Carbone of the Digital Chamber. Take a look.
Well, the digital asset industry is pushing for a major legislative breakthrough on Capitol Hill. Lawmakers are finally closing in on a federal framework, but we saw a significant bipartisan compromise in the Senate designed to settle the long-standing debate over stablecoin yield. With the Treasury Secretary now urging Congress to act, momentum for an immediate committee markup is rapidly building, but banking groups are cooling some of the hopes. They say the yield compromise falls short because it's not a full ban on interest payments. Well, the big question is whether Washington can actually get this legislation across the finish line ahead of the midterm elections. Well, joining me to talk about this push for clarity in Miami is Cody Carbone, who's the CEO of blockchain trade group, the Digital Chamber. Cody, great to see you here. Thank you so much for joining me.
Of course, great to be here, Remy.
Well, we are kicking off this 3-day conference, Consensus 2026. What do you think of some of the progress that we've made so far, and how far are we from actually getting the Clarity Pass?
We're finally on the precipice. I would say we're on the 1 yard line. Things are all coming together. There is momentum from all stakeholders involved, Republicans, Democrats in Congress, the White House, industry stakeholders. We are very close. So I expect that this week there will be some major announcements, hopefully some scheduling announcements, and we'll get that markup, as you alluded to, in the Senate Banking Committee. And finally, this bill to the president's desk. We need to pass market structure legislation.
Yeah, and it's really interesting because this theme for the conference consensus is convergence. And indeed, we are seeing a convergence, whether we're talking about the banks or the decentralized finance space. There are policymakers as well as innovators and also media here on the ground in Miami. But here we are in May, right? And we're just coming off of tax season. So what do you think needs to happen when it comes to taxes on crypto, especially when it comes to consumer protection? Because this tax season was a bit confusing.
Oh, yeah. And market structure legislation is critical. But until we get tax clarity in the digital asset space, then the US will never be the crypto capital of the world. So many of these tokens will continue to be issued offshore in more tax-friendly jurisdictions. The tax guidance that is in place for the digital asset space is over a decade old. The IRS needs to act. There's legislation that is being proposed in Congress right now. There's the Digital Asset Parity Act out of the House. It's a bipartisan bill from Congressman Horsford, Democrat from Nevada, and Congressman Miller, Republican from Ohio. We are going to be pushing tax legislation very, very hard. People need to be comfortable using their Bitcoin, using their Ethereum, their Solana. Right now, they can't because there's tax burdens there. We need to make very, very clear the tax reporting language, and we need a legislation to do that.
Yeah, and while I have you here, Cody, I do want to ask you about prediction markets because on a regular day, we have all of our devices, right? Whether we're talking about our laptops or our smartphones, and there's so much happening in the world, whether we're talking about politics, geopolitics, or sports, or even the markets, right? So what do you think needs to happen when it comes to prediction markets? Because we can harness some of what's unfolding in the space, but there need to be federal guidelines.
This is the topic du jour. This is what everyone is talking about in DC. While we're pushing digital asset legislation, prediction markets is taking up all of the oxygen. And so we're getting involved with the digital chamber because we like to advocate for responsible disruption and innovation. There needs to be a federal framework for prediction markets. And we are making sure and working with the CFTC, working with members of Congress to make sure that the CFTC has exclusive jurisdiction over prediction markets. We are very hopeful that we will see a rulemaking from the CFTC soon. We just responded to an advance notice of proposed rulemaking from the CFTC to make sure they do have exclusive jurisdiction. We're going to be getting involved in some of the enforcement actions that are happening at the state level and that the CFTC are bringing, providing amicus briefs. Prediction markets provide a new way to be informed, and people want them. The prediction market space is exploding. Retail users from all across the world are tapping into these markets. If we want the US to lead, we need clear rules. We can't have this fragmentation of the states and the federal government fighting against each other. The CFTC has exclusive jurisdiction here. They've had exclusive jurisdiction over event contracts for a long time. We're going to make sure that continues to be the case.
So thank you so much, Cody, for joining me here in Miami. I appreciate it.
Of course. Thanks, Remy.
Thank you.
Welcome back to the show, live from the trading floor of the New York Stock Exchange. Dylan Taylor joins us now here on the floor. He is the chairman and CEO of Voyager Technologies. Great to see you. Thanks for taking some time.
Thanks, JD. Great to be with you.
You got a record backlog. You've lifted your guidance. Talk to me about where you see Voyager is right now.
You know, we're very fortunate because we play in national security, defense, and space, and all three of those sectors are super hot right now. Not only is the customer spending more dollars in those areas, but we have relevant technologies really in all the infrastructure projects that are name of the game, like Golden Dome, lunar strategy, low Earth orbit, and the like. So we really think we're strategically positioned with the right technology and with the right environment in this market to take advantage of it.
I wonder where you think we are in that environment. Where are we in the commercialization curve for space as the next frontier of big business?
Space is the place, as I like to say. I think we're right there. I mean, we're about ready to have the biggest IPO in the history of civilization. And that's right at the center of our industry with SpaceX. Of course, there's now an AI component to that and data center and all that, but it's fundamentally a space company. So I think it's now. I mean, if I look at what's happening, you know, the Artemis 2 mission, I'm sure you followed that. I mean, we sent humans out 250,000 miles from Earth. I mean, how can you not get excited about that? So I think we're there. the commercialization is happening right now.
Dylan, I got to tell you, in the last week, in terms of important visitors we've had here at the New York Stock Exchange, we've had the Artemis 2 astronauts, and we've had you.
Well,
you were
thank
just here
you.
on Friday as well. So,
Well,
we're doing a lot with space right now.
And we had Jared Isaacman as well.
That's right. He did the bell for us last Wednesday.
That's right.
So to the point about NASA, speaking of administrator, perfectly well-timed, NASA's leaning more and more on private missions, that
Right.
relationship that NASA has with private companies.
Right.
What does the latest selection here signal, and how do you view how important that relationship is?
Well, public-private partnerships is really the name of the game, right? I mean, it's been overused, but a win-win-win. When the customer saves money, gets a better outcome, the companies are better off, and ultimately the investors are better off. And that's really where these public-private partnerships are headed. So we were very fortunate. We won a private astronaut mission, the so-called PAM-7 mission. This will send private astronauts to the International Space Station. That's great training for us because we're building our own commercial space station, Starlab. And so think of those astronauts being basically a dry run, if you will, an important dry run for our commercial space station as well.
I'm really fascinated with Starlab, the idea of it, because a lot of people may not realize that the iconic ISS essentially has to be retired in just the next 4 to 5 years or so. I assume that means we just kind of crash landed down into Point Nemo, like we do a lot of our other kind of satellite type of things. Can Starlab or something comparable be a true one-for-one replacement of the great ISS?
More than one station can replace the ISS. So we're about 100% of the research volume of the ISS in a single launch to orbit, taking advantage of SpaceX Starship. So, but there'll be other commercial space stations as well, because keep in mind, this is not just addressing the demand of the International Space Station, it's addressing all these other new use cases that become prevalent when you have a commercial model. So for example, biopharma drug development. Why are we not developing more drugs in space today? Because it's supply constrained with the International Space Station. ISS is aging, it's old, it's been up there 25 plus years, but in a commercial model, ours is optimized around research. So you can have this flourishing of space research, biopharma, ag tech, semiconductor development, perfect crystals grown in space, organelles grown in space. And to answer your question, yes, the ISS is going to be dropped into the South Pacific probably in 2032. That's going to be its fate.
That's not very far away.
I know.
Yeah, that's happening. That's coming up pretty quickly here. What most excites you about the general moment that not just NASA but space exploration is having? It's been impossible to ignore these last few years, and we really saw it, not just as an American people, but I'd argue all around the world.
For sure.
With this Artemis 2 mission.
For sure. And I think that's the beauty of space, is it really inspires not only everybody, you know, from all walks of life, people in the industry but outside the industry, but it also makes you imagine what's possible. So the Apollo generation inspired a bunch of people for years and years and years, and I think the Artemis generation will do the same. But to answer your question, I'm more excited about the return to the moon. And not only flags and footprints, but a lunar base, infrastructure. You know, I like to tell this story. Imagine you're sitting on your porch on a summer evening in upstate New York at your cabin, and you're looking at the moon, and there's lights on the moon. And there's lights on the moon because people are living and working on the moon. I think that's a cool thought. I think that's a romantic notion of where we can take this thing.
I think a lot of people out there would agree. Dylan Taylor, Chairman and CEO of Voyager Technologies at Astra, sir, and thanks for being here. It's nice to see you.
At Astra, well done.
All right, a lot more Taking Stock coming up live right after this. Welcome back to the show. Time now for a few headlines in the world of fintech, crypto, and artificial intelligence you need for your Tuesday afternoon. First up, the crypto majors all up. Bitcoin reclaiming 81,663, up 2% on the day. Next up, the New York Times reporting the White House is weighing new steps to regulate artificial intelligence, and that includes a government working group and a possible review process for more advanced AI models. And finally, Coinbase set to slash about 700 jobs. It's roughly 14% of the firm's overall workforce. The announcement comes as the company shifts towards greater use of artificial intelligence in order to boost efficiency. And now in our continuing coverage of Consensus 2026 in the great city of Miami, FinTech TV lead anchor Remy Blair sat down with Edward Woodford of Zero Hash. Take a look.
Welcome to FinTech TV. I'm Remy Blair. Well, the integration of digital assets into TradFi has moved well beyond the experimental phase. We're now watching a fundamental restructuring of global market infrastructure. From instant brokerage settlements to AI-driven capital allocation, the plumbing of TradFi is being upgraded for real-time efficiency. Now, Zero Hash is powering crypto for giants like BlackRock as well as Morgan Stanley, and now they are making a massive regulatory move. The infrastructure provider did file for a national trust bank charter with the OCC. Well, joining us live from Consensus 2026 in Miami is Zero Hash CEO Edward Woodford. Great to have you here. Thank you so much for joining me.
Yeah, thank you.
Well, you will be taking the stage here at Consensus 2026 with Morgan Stanley. So tell our viewing audience about this partnership.
Yeah, so tomorrow I'm going to be on stage interviewing Jed Finn, who's the global head of wealth at Morgan Stanley. They are the largest wealth manager in the world, actually, with over $7 trillion in assets. And so it's a really meaningful step to have a group of that size entering and now live in the crypto space and with their partnership with Zero Hash. And very simply, we see this as a convergence between traditional finance and crypto, one and the same. And ultimately, what's particularly exciting about that partnership with Morgan Stanley is that it's the first step into a much broader relationship, and more to come soon on that.
And I do want to get your perspective, Edward, when it comes to round-the-clock settlement. So how does that fundamentally change the brokerage business model?
Yeah, so Zero Hash has a product called stablecoin account funding. And really, we're seeing a large macro shift in terms of the way that trading is done globally, both with, for example, 24/7 trading, as well as tokenization, as well as the rise of prediction markets. And those three factors are really converging with the need for the velocity of money to move more quickly within capital markets. And so as you think about capital markets and the evolution, the money velocity really matters increasingly in this space. And so Zero Hash partners with groups like Kalshi, Interactive Brokers, and several other large traditional financial institutions to allow for funds to be received 24/7, 365 from anywhere at any time. And that really unlocks a much, much bigger market and TAM for these capital market providers.
Yeah, and speaking of that, I do want you to expand on tokenization. This is something that we'll be hearing a lot about on the ground here at Consensus. But when we're talking about how critical stable coins are to making tokenization work at a scalable institutional level, break this down for us.
Yeah, so Zero Hash works with some of the largest tokenization providers out there. Our customers include groups like BlackRock, Securitize, Republic, Franklin Templeton. And really the commonality with all of these groups is one of the promises of tokenization is effectively the ability to move value instantly, globally, and fractionalize that across the world. And effectively, Zero Hash and stablecoins are a critical part of that unlock. So you have assets that can move instantly and globally, but free rails cannot. And so stablecoins really allow for that interoperability between a tokenized instrument as well as a tokenized dollar. And that is the unlock. And that's why, for example, in H2 of last year, 35% of all tokenized money market funds actually flow through Zero Hash funding rails.
I appreciate your time, Edward. Thank you so much for joining us here at Consensus.
Welcome back to the show. Time now for a few headlines. Hey, now in the worlds of startups, raises, and rounds, first up, Cerebras Systems moving towards a blockbuster IPO that could raise $3.5 billion. The listing would signal strong investor appetite for new players in the AI infrastructure race. Next up, former federal prosecutor and former Andreessen Horowitz partner Katie Wan raising $1 billion for new funds targeting crypto and blockchain. And finally, ex-Twitter CEO Parag Agrawal raising $100 million for parallel web systems, valuing the company at $2 billion. And now Money 2020's very own Scarlett Sieber is back to explain the ways that fintech companies really make money. Take a look.
I'm Scarlett Sieber with Money 2020, and this is how fintech companies actually make money. Today we're going to be talking about Alaka Bank, a fintech that became a unicorn by doing something completely unfashionable, acting like a disciplined bank. Alaka is a digital bank built specifically for UK SMEs, businesses that are often too big for retail banks and too small to get priority attention elsewhere. How does Alaka actually make that money, you ask? First, net interest margin from lending to SMEs, it understands super well. Second, deposit spread from business accounts. Third, fees from payments and services. And fourth, cost efficiency driven by modern infrastructure rather than the legacy systems. So what makes Alaka different is its restraint. It doesn't try to be everything for everyone. It doesn't chase unprofitable growth. It focuses on customers and unit economics first. That's really important. Let's do a momentum check here for a second. Alaka's Series D in February 26, it pushed it into unicorn territory, not through hype, but through that discipline. So what is the moat that Alaka has exactly? Specialization. SMEs aren't a side project here. They're the core design input. And that, my friends, is how Alaka Bank actually makes money, by choosing focus over flash and margins over noise. In banking, boring done well is still undefeated. Have a comment about a company that you want us to feature? Go ahead and drop it below, and we just might make the cut. In the meantime, back over to you.
Tomorrow morning here on Wall Street, the latest quarterly results from Disney, Novo Nordisk, Uber, and CVS. And this time tomorrow after the bell, the latest numbers from AppLovin. All-time highs today here on the street for the S&P, the tech-heavy NASDAQ, and the Russell 2000. Thanks for watching today's edition of Taking Stock. Have a great night. We'll see you again tomorrow live from the big board. That was good. That was, well...